Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 4th of March 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's have a look at the overnight changes and price moves to be aware of. It's Monday, of course, and so we're looking at things from a weekly perspective. The British pound against the US dollar, the cable rate, 132.28.90 shortly before we recorded the video. The move on the week, the pound sterling gaining by just over 1% against the US dollar, though it had been higher, and we did see that drift into the weekend. And speaking of drifting lower, that's what we saw from both the Australian and New Zealand dollars over the course of the last week, both giving back just over 1% against the US currency. The US dollar was also on the front foot against near neighbours Canada and Mexico, taking 0.78% off of the Canadian dollar and clawing back just over 1% against the Mexican peso. The bigger gains for the week, though, were seen in the dollar against the rand, where the dollar took 2.37% off of the South African currency, and the rand trading back above 14 now to the dollar. Dollar index for its part starting the week at 96.46, pretty much unchanged on the course of the last week, and mid-range really from the levels that we've seen of late. Of course, there's some pretty big economic data coming out of the States this week, and so it'll be interesting to see how the dollar index fares on the back of that. Speaking of data, what's on the calendar, events that may move the markets today? Well, we've already had some pretty interesting data sets out of Australia this morning, including inflation, gross operating profits, building permits and new home starts, and we'll have a look at some of that data a little bit later on. To come in GMT Europe this morning, we shall have unemployment change data for February out of Spain. We'll have at 9:30 GMT market construction PMI data for February from the UK, as I say, and then at 9:30 as well we'll have Centex investor confidence data for March for the whole of the Eurozone, and then half an hour later, probably the pick of the day's data, producer price index data out of the Eurozone for the month of February. Look at factory gate inflation and how or what price pressures European manufacturing and services businesses are under. Then at 14:45 we hop over the Atlantic for the ISM New York Business Conditions Index data for February, and that's followed at 1500 by construction spending data out of the US for the month of December. There are 6-month and 3-month bill auctions to contend with at 16:30 GMT this afternoon out of the States, and our final piece of data at 21:30 we're back in Australia for the AIG Performance of Services Index for the month of February. Okay then, breaking news and comment that's caught my eye overnight and over the weekend. And first of all, delegates gather in Beijing for the National People's Congress, which is their sort of annual gathering of the good and the great and the party, decision-making plenary, if we can call it that. And markets will be watching for new laws on investment and comments from the leadership on growth, trade and defence spending, and that conference or Congress is scheduled to take place over the next 2 weeks. Meanwhile, Australian building approvals for January bounced back after 3 months of contraction. That was the pick of a mixed bunch of data out of Australia this morning, and of course we have the RBA interest rate meeting to come tomorrow morning. Taiwanese Feb manufacturing PMI fell to 46.3, down from 47.5 in January, and this was the 5th month of falls in the data. So signs of the continuing contraction, I suppose I should say there, in Taiwan's manufacturing economy. That wasn't the only disappointing data point out of Asia this morning. South Korea's Feb manufacturing PMI came in at 47.2. This was the sharpest decline seen since July 2015, and perhaps more concerning, the new orders component in that data fell at the fastest rate for 4 years. So it's not just China that's under the cosh of a potential slowdown, it's actually materialising here in Taiwan and South Korean manufacturing. Okay then, food for thought, something to take away with you into the trading day and beyond. Well, why not think about this? This is a very interesting chart drawn from the Credit Suisse Global Investment Yearbook, which was recently published and is available online, and it shows the composition of the UK and US stock markets in 1900 and again in 2019. Fascinating to look at the breakdown in sectors, but very interesting, for instance, to note that rail was the dominant sector, shall we say, in the stock markets of both the UK and the US just over 119 years ago, and how that breakdown now has changed with many more sectors and less dominance in any one particular area. Well worth studying that chart anyway, and looking up the investment yearbook for a larger perspective. Okay, please do take the time to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, do take the time please to read this risk warning thoroughly. Thank you for your time today.